Hi everyone, welcome back to the channel. In this video, I want to do a quick market update for you guys since I haven't done one of these in a while. So in this video, what we're going to do is take a look at what the sentiment looks like in the stock market. Like I've said, that's something I take a look at once in a while to see how other investors are positioned in the stock market. Then we're also going to take a look at some other factors like bonds, gold, and the US dollar, because all of those play into how stocks perform. All right, so let's get started. First, we'll take a look at the stock market. This is the SP 500, and this is the client sentiment report. This is something I've referenced multiple times on this channel. And by the way, I'll have the link to all of the websites that I'm using in this video down in the description so you can check them out for yourself. But the main point of this client sentiment index is really to see how investors are positioned in the market. And what usually happens is the market moves opposite to what everyone expects to happen. So just taking a look at this chart, you can really see that here where the blue area is long traders, the red area is short traders, and when investors get bullish, when the amount of net long traders goes up, the market tends to have a pullback. And this whole period from what is this, June all the way to September, when traders are becoming more and more bearish, the stock market was going up that entire time. And again, with the most recent pullback, we again saw that long traders rush into the market, and then we've seen that sort of back off a bit. So in terms of this, there's not really anything new. We can take a look. There's still more net short traders than long traders. And like I said, until that flips, it's likely that we're going to see the same kind of thing in the stock market where the overall trend remains to be up. So we can take a look at the analysis. Trader data shows 39% of traders are net long, and the ratio of traders short to long is 1.55 to 1. So for every one long trader, there's around 1.5 short traders. And so if you use this as a contrarian indicator, it suggests that stocks may continue to rise in the short run. So no real news on this front yet. As I've said multiple times, I am long-term bearish on the markets, but until we reach a point where there's excessive greed in the markets and we see the number of long traders far outpace the number of short traders, until that happens, it's pretty likely that stocks will continue to go up. But you can see again, we've been on the rise in terms of long traders. So over the past 2 months since September, this is the most bullish traders have been in a while, right? At least going back to March, April, and May. And so this could signal a turning point where if we see this trend continue, more long traders go into the market. That is probably the time to be a little more cautious in the markets where I probably won't sell any stocks, but that might be a point at where I put a hedge on with some put options or something like that. Okay, so now we can take a look at some other information, and this website is hedgeopia.com, and this takes a look at hedge funds and what they're doing in the stock market. This is a great resource, and so again, I'll put the link down below. And the interesting thing that I saw is how hedge funds are positioned on bonds. So we can take a look. This is the 10-year note. Not really much to say here. Hedge funds are slightly long, but the real thing that stood out to me was taking a look at the 30-year bond and just taking a look at the sentiment. It looks like hedge funds are extremely bearish on the long-term 30-year bonds. All right, this is the most short hedge funds have been going back to at least 2016 and probably a while before that too. And of course, hedge funds are doing this with the expectation that long-term interest rates are going to rise, because bonds and interest rates are inversely related. So if they're positioned for the long-term 30-year bond to go down, that means they think the 30-year rate will go up. And so here's the thing, generally I agree with that. I've said on this channel, I think interest rates are going to rise substantially a lot sooner than most people think, but right now probably isn't the time it's going to happen. Why? Because we already have all of this money short on the 30-year bond. For the past year, the 30-year bond has been falling, and we now see so many people short the 30-year bond. So the question I have is, if we already have this much money short on the 30-year bond, and bond prices are probably slightly down this year, but they're up since that crash we had in March. And for the 30-year to keep going down, you're going to need to have sellers. And from what I see, there's way too many sellers in the market already. And because of that, I would expect short-term 30-year bonds to go up. And we actually could see a pretty significant short squeeze if we see a rapid move up in the 30-year bond. A lot of these shorts would probably be forced to cover their positions. So that is what I'm keeping an eye out for. Again, long-term, I think bonds fall, interest rates rise. But right now, with all the pessimism for the 30-year bond, I think for that to happen right away seems pretty unlikely. We can also take a look at the SP 500 in terms of hedge funds. Not really much to see here. Hedge funds are slightly long, but until this reading gets to an extreme, not really much to look into. All right, and here is another chart looking at hedge funds allocation to the US dollar futures, and the dollar has gotten crushed since the beginning of this year. And we did see hedge funds pretty substantially short on the dollar, but we recently saw that flip, and hedge funds have now been long for the first time since the beginning of this year. And so that is another interesting factor that shows up in this chart. This shows US dollar hedger positions versus what the dollar actually does. And I thought this was pretty interesting, where you have this line representing who's short versus who's long the dollar. And if you look at the past 2 times this has happened, right, like we just saw, a majority of people were short the dollar and now they just flipped to long. And the last 2 times that this happened, back in 2014 and as recently as 2018, where we saw traders go short the dollar and then reverse and go long. At those points, after that happened, the dollar tended to rally after that. We saw in 2014 a pretty strong rally, and then also again in 2018. So, a couple of factors favoring the dollar here. Long term, I think that the dollar is going to lose value, but from what it looks like, we could see a potential for a run up in the dollar before that happens. And in all likelihood, that would be bad for the stock market. That would also be bad for gold. When the dollar strengthens, that's usually bad for US companies and is definitely bad for gold as the dollar gains value. All right, so another chart we can take a look at is small cap versus large cap. So this is the price to earnings ratio of the Russell 2000 relative to the S&P 500. Russell 2000 representing the small cap stocks and S&P 500 representing the larger caps. And this chart shows that the relative valuation, this is an extreme that we've really only seen during one other time period since 1987. So that's over 30 years. And you can see we're at right about the same level as the general period from around 1999 to 2001. And right before that, we had a sharp drop where we had large caps outperforming small caps. We stuck around this level for a couple years and then small caps rebounded. This typically is a mean reverting thing. So there's periods of time where small caps outperform large caps and vice versa, but over time it tends to even out. And so right now we are again at this same extreme that we saw back at the beginning of the 2000s. And so again, setting up for another similar thing where we see reversion to the mean, small cap stocks outperforming the large caps that have been dominating really over the past decade. And so this is something I fully expect to happen over the next decade. Again, it might not happen right away, but this is something I expect to happen, and my portfolio is positioned accordingly. Most of the stocks I own are smaller cap companies, and so in the event that this does play out, it would be very good for me in my portfolio. And the last thing we're going to take a look at is gold. Like I just said, the dollar has been beaten down, and there is a pretty good chance that we could see a rally in the dollar in the near future. So if that happens, that would be bad for gold. We can take a look at this article. The beaten down dollar is a major short-term risk for gold. For decades, gold has inversely mirrored the world reserve currency. So if you take a look at this chart, it's not perfect, and there are times where they move together, but the general correlation is the dollar and gold are inversely correlated, right? When the dollar's going up, gold is going down, and vice versa. And that has been the case at least this year, where this year we've seen a huge run up in gold and a huge fall in the dollar. And since then, we've seen a reversal where the dollar has gained some strength, and we have seen gold fall off since they made a new all-time high back a few months ago. So we can see in the article, the dollar's plummeting last summer was driven by the short sellers. And like I showed you in those previous charts, now traders have flipped to being slightly long the dollar, so it looks like those shorts are starting to cover their positions. And if we see that continuing, the dollar may continue to rally. And we did also see gold perform very well. Gold went parabolic in July, and it had a over 13% gain in just a couple of weeks. And the main driver of this was extreme gold ETF share buying. Good for me, one of the stocks in my portfolio is Sprott that has gold and gold miner ETFs. So that is definitely a trend I expect to continue. But short term, when you have these huge up moves like this, it generally means there's going to be a pullback at some point. And so all these factors considered, I would not be surprised at all if we do see gold continue to pull back and the dollar rise briefly before the main trends continue. Obviously, I'm still very bullish for gold long term, but for every bull market, there are corrections along the way. And the one we had most recently, I think it's only been, like a 10% correction. So that could go to easily 20% or even more. But that is not something I'm worried about. And I would embrace that. And I would use that as an opportunity to buy some more gold stocks, as I do think gold will still perform very well over the next few years. In terms of where gold could go, we can take a look at this chart, and the blue line is gold. And during rallies, gold has usually touched the 200-day moving average. That's the black line on this chart. You can see it almost touched it here. We pulled back, and during the crash in March, we saw gold hit that point. And so right now we are pretty far above there. So we could see a pullback to that 200-day moving average. If that did happen, that would be around 1750 to 1800 per ounce of gold. So if gold did fall to that price, that is where I would feel pretty confident buying some more gold stocks. So that's it for this update talking about the stock market, gold, the dollar, and bonds. figured I'd do an update, especially since we have the election coming up and that could cause some increased volatility in the stock market, which would affect all of these factors. So let me know what you think about this analysis. If you do think the stock market will continue going up even with the election happening in under 2 weeks now, and what you think about bonds and gold. So that's it for this video. If you found something of value, hit the like button to help out my channel a ton. And if this is your first time on the channel, subscribe right now and hit the bell icon to get notified whenever I upload new videos like this. So that's it for now, and I'll see you next time.